There is one small island in the Pacific Ocean that could disrupt the entire global economy. Not because of oil, not because of military power, but because of something far smaller. Semiconductors. Silicon wafers thinner than a human fingernail. And if that supply ever gets disrupted, entire stock markets wouldn't just fall, but industries would simply stop functioning. Most investors never think about semiconductors, but in reality, they are the invisible backbone of every modern economy, every smartphone, every data center, every car on the road. All of it depends on one thing: advanced chips. And the production of those chips is one of the most concentrated industries in human history. At the center of that concentration is a single company, Taiwan Semiconductor Manufacturing Company, a company that manufactures the chips powering the entire AI economy. But that description is actually misleading because it doesn't explain how dependent the world really is on it. TSMC is not just a chip company. It produces over 90% of global advanced microchips. And if for some reason that production stopped, the tech industry would grind to a halt. Here's the key point most people miss. Tech companies like Apple, Nvidia, and Google can design all the chips they want, but almost none of them can actually manufacture the most advanced ones. That job is overwhelmingly done in one place, Taiwan, and specifically inside TSMC's factories. This creates something rare in global markets, a single-point dependency in a multi-trillion-dollar industry. And that matters more than ever with the current rise of artificial intelligence. AI is not just a new software trend. It is a hardware supercycle that is growing exponentially. Every new model requires more compute, more energy, more advanced chips, which means demand for leading-edge semiconductors is exploding, and supply is not keeping up easily. During the early 2020s, the world got a preview of what happens when this system breaks. Automakers halted production, electronics prices spiked, entire industries delayed output. And that was just a mild disruption, not a structural shock. Now, zoom out because today, the stakes are much higher. AI companies are investing hundreds of billions of dollars into compute infrastructure. Governments are treating semiconductors as national security assets. And investors are starting to realize something uncomfortable. The entire AI growth story is built on a supply chain that is extremely geographically concentrated. This is why Taiwan matters so much in financial markets. Not because it controls the world, but because it sits at a critical choke point in global economy. If chip supply tightens, valuations across the entire tech sector reprice. If supply expands, growth accelerates. If it's disrupted, global earnings forecasts break. And here's the part markets rarely say out loud. Rebuilding this manufacturing ecosystem is not a short-term project. It took Taiwan decades of precision engineering, talent, and capital investment to be the leading supplier. This is not something that can be duplicated by others quickly, even with unlimited money. When investors look at semiconductors today, they are not just looking at tech stocks. They are looking at global GDP sensitivity, AI infrastructure constraint, geopolitical uncertainty, and extreme supply chain concentration. In other words, they are looking at the hidden foundation of modern financial markets. So, the next time you hear about AI stocks rallying, chip demand exploding, or semiconductor shortages, remember this. Behind all of it is a small island that has quietly become one of the most important pressure points in global finance. Not because it controls the world, but because the world is built on top of it. If you liked the video, give it a like, subscribe, and tell me how can I improve. Until the next show of power, thanks for watching.